Hello and welcome. Today, we're doing a deep dive into something really fundamental.
We are indeed. We're going to unpack what financial planning actually is, in simple terms.
Exactly. Think of it as getting a clear map for your money, helping you manage it for, well, your life and your goals.
That's a great way to put it. It's really about two key things, isn't it? First, looking squarely at your money situation right now.
Okay, so, what you actually have and what you might owe someone.
Precisely. What cash you have, what things you own, but also any debts.
Yeah.
And what money's coming in each month and where it's all going out.
That's right. The income and the expenses.
Yeah. And the second part is deciding where you want that money to go towards your future goals.
And these goals, they don't need to be massive, world-changing things, do they?
Oh, not at all. A goal could be as simple as, say, putting aside $100 for something specific you want to buy soon.
Or maybe a bit bigger, like saving up $500 towards a deposit on a car, perhaps.
Exactly. Big or small. The plan part is really just about setting priorities. It helps you figure out the steps needed to get there over time. It's a way to organize things.
Okay, so understanding where you are now is key. You mentioned looking at what you have and what you owe. Is there a simple way to get a snapshot of that?
There is. It's called your net worth. It's probably the simplest way to see your overall financial picture at one specific moment.
Net worth, right.
Yeah.
Can you break that down for us? Keep it really simple.
Yeah, absolutely. It sounds maybe complicated, but it's not. It's just everything you own. We call those assets.
Okay, assets, like money in the bank, or maybe a car if you own it.
Exactly. Things that have value. Then you subtract everything you owe. Those are your liabilities.
Liabilities, so that's debts, like a credit card bill or a loan.
Spot on. Credit cards, car loans, student loans, anything you owe money on. So assets minus liabilities equals your net worth.
Let's try an example. Say you've got $50 in savings. That's an asset.
Right.
But you owe $10 on a credit card. That's a liability. So your net worth there would be $50 minus $10, which is $40.
Perfect. Simple as that. Or maybe you own a bike worth $500. That's an asset. But you still owe $200 on it. That's a liability.
So that bike adds $300 to your net worth. $500 minus $200.
Exactly. You just add up all your assets, add up all your liabilities, and subtract the second number from the first.
And keeping track of that number, say checking it once a year, can show you if you're heading in the right direction, if your financial health is improving.
It really can. It makes things less abstract, more concrete. It gives you a benchmark.
Now, something that often comes up is this idea that financial planning is, well, only for people who already have lots of money. Is there any truth to that?
That's a really common myth. And no, it's absolutely not true. Financial planning is for everyone. Honestly, everyone.
Regardless of how much you earn or save. Or your age.
Yes, absolutely. In fact, you could argue it's even more important if you don't have a lot of money or if you're juggling debts. It's about gaining control.
So it's more about feeling less stressed about money and more in charge.
Precisely. It's a tool to help you feel more secure and make progress, whatever your starting point. It's about being intentional, not about being wealthy.
Okay, that makes sense. So if someone's listening and thinking, right, I want to start, what are some simple, practical first steps?
Good question. First step, really get a handle on your cash flow. That just means figuring out what money actually comes in each month and where it all goes.
Like knowing your phone bill is $50 and you spent about $100 on groceries last week, that sort of detail.
Exactly that. Just tracking it for a month or two can be incredibly revealing. See where the money is flowing.
Okay, track the flow. What's next?
Second, think about just one or two simple, clear money goals. Don't overwhelm yourself. Maybe it's saving that first $100 for an emergency. Or maybe paying off one small, annoying debt. Keep it achievable.
Makes sense. Start small, build momentum, and third,
take that snapshot we talked about. Calculate your net worth, even if it's just a rough estimate to begin with. What you own minus what you owe.
Right, get that baseline number.
Yeah. And the fourth thing is really important. Remember that this plan isn't set in stone. Life changes, right?
All the time. You might get a new job or have an unexpected expense pop up.
Exactly. So your plan needs to be flexible. You need to look at it now and then and adjust it as your life changes. Adapting is key. It's a living thing, not a rigid document.
So to sum it up, financial planning is really about understanding your money, setting some goals, knowing your cash flow and net worth, and crucially, being ready to adapt.
That's it. It sounds straightforward, and the basics really are. It's about giving you peace of mind and helping you use your money in a way that serves you and your goals. Making conscious choices.
Well, hopefully that's cleared things up a bit. If you found this deep dive useful, perhaps consider liking or sharing it so others might find it too.
And maybe just one thought to leave you with. Thinking about your own situation right now, what's just one small, intentional money choice you could make this week that moves you even slightly towards one of your goals?